All right, good morning, traders. It's April 6th, 2026. My name, Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. That is the day trading service for the hit and run candlesticks family. I just want you to know that there are two other services here, okay? They both do a little bit of swing trading. One mainly he trades a lot of options, and he knows a lot about options, and that would be right way options. And then there is a lot of swing trades done inside the hit and run candlesticks room. All right, so it's not just one service, it's actually three services. All right, here you're just getting a peek at one of the services, so appreciate that. So, by the way, Kate, want to special shout out and thank you to everybody that follows my content on Facebook, follows my content, and subscribes to my content on YouTube. Thank you to everybody that follows and subscribes to my content on Twitter. Appreciate that. Love that. Thank you for all the kind words. That does not go unnoticed. And there are some of you that actually share my content, and I want to give a special thanks for you. That would be Ed Carter, Rick Sadler, Bob Jordan, John Jordan, Kathy, Sarah Roasted, anybody that shares the content does not go unnoticed. Appreciate that. Love that. Thank you so much. All right, let's move this out of the way. Today we're going to cover my 10-minute strategy. We're going to go over a few secrets of VWAP. We're going to go over some green erases red and maybe some red erases green. We'll see how the day goes. When and how to trade option candles. Casting exit and entry nets, and trying to be done with your trading by noon. Sometimes we're done by 10 o'clock. We'll see what happens, all right? So there's the itinerary for today, all right, at the BYOB Trading Workshop. I did put some slides in the chat area, okay, and you'll see them right in here. Okay, if you like a slide, you want a slide, I advise you not to print the slide because they are all black background. It will use up all of your ink. I advise you to just take the slide, download the image, stick it in a file on your desktop, put it under BYOB Trading, and just stick it in that file for e-learning, for trading learning, okay? So, education, there you go. All right, so these are some of the slides here. They're there. I put them up there so I could share them with everybody. I'm going to go over them in a little while here, but I just want to get the market going, get everybody. Let's take a look at what happened Friday and see how we can make some profits today. All right, so move this out of the way right now. And let's pull up this slide right here. Okay, so some of these numbers may have changed since the market opened, all right, at 7 o'clock. All right, so my SPY pivot this morning is not 655.90. Okay, so let's go take a look where it is. All right, for SPY, my SPY pivot is 652.50. All right, that's my SPY pivot, 652.50. Okay, so like I said, some of those numbers may have changed. All right, let's get that back up there. Okay, so my SPY pivot this morning, 652.50. Above it, I'm a bull. Below it, I'm a bear. On Friday, Diamond Dow, SPY, and QQQ made lower highs, lower lows, closing over bullish crosses, but under the 17 EMAs. IWM, lower high, lower low, closing over a bullish trap and over the falling 17. SPY closed with a 2-hour uptrend, 10-minute uptrend. FNGU, aka Stinker, made a lower high and a lower low, closing over a bearish trap, but under the 17 EMA. Gold made a lower high, lower low, closing over a bullish trap, but under a falling 17. Silver, lower high, lower low, closing inside a bullish trap and over the 17. USO made a new 10-year high, okay, brand new 10-year high made on USO. UNG, lower high, lower low, closing under a bearish trap under the 17 EMA. US dollar index closed, still in an uptrend, in a daily uptrend, closed near the 100 area. SPY max pain, it may have changed, all right, is 650 with a put to call ratio of about 2 puts for each call that expires today at 4:15. Now, if this is your first time seeing this page, which is posted on most social media most times, okay, these are all in daily uptrends over the 17 EMA. These are all in daily downtrends under the 17 EMA, okay? They got a little star next to it over here. That means they're building out a bull flag from which to launch higher. I call it a launch pad. It's really just a bull flag, all right? So if they got a little star next to it over here, that would be a bull flag from which to launch higher. If they got a little star next to it on this side, they're building out a platform, or I call it a bear flag. I call it a platform. It is a bear flag from which to dive lower, okay? So this would be a diving platform to dive lower. This would be a launch pad to launch higher. So 17, over the 17 on the bull side, under the 17. These are for swing trades. If you're interested in a swing trade, take a peek at those. A lot of nice looking charts in there. If they got a little dash next to it, all right, that means they've already done the breakdown or the breakup. All right, so if I erase the star next to it the following day and put a dash, that means they probably just they just started their breakout or their breakdown. All right, so there's some swing trades for you right there. All right, so let's take a look at the markets, and let's pick up this chart right here. And I like the 10-minute, and I want to point out what happened on Friday. Okay, so you got a nice little uptrend. See the 3 EMA up over the 8 EMA right there. We kind of figured it was going up there, being since N1, which was negative gamma exposure, was up top here at 655. So we kind of figured price would probably trade, well, actually 652. But we kind of figured price would go after N1 and probably make its way towards P1, which is positive gamma exposure. Okay, so what is N1? N1 is the strike with the highest negative gamma exposure. What is P1? P1 is the strike with the highest positive gamma exposure. Okay, so we saw that and we said, well, probably going to go up there. So we had actually tried to pick off the lows of these candles, recognizing there's a high probability that price would go after N1. And once they got to N1, they actually just kept going. You can see with this big blast off candle right there. So coming into the close on the 10-minute chart, you can see the 3 EMA, which is this thin yellow line, all right, and the candlesticks are plotting up over the 8 EMA, which is this white line right here. I'm on a 10-minute chart of the SPY. Okay, so we got, I call it, that's a 10-minute uptrend over VWAP right there. So that's 10-minute uptrend coming into the close on Friday, all right? Let's take a look at the 2-hour chart, all right? We got the candlesticks and the 3 EMA are plotting, all right, or are riding on top of the 8 EMA. So into the close, you can see daylight between this thin yellow line and the white line, which is actually obscured by the VWAP line, okay, right through there. So you can see that there's daylight between the two. We have a 2-hour uptrend coming into the close on Friday on the daily chart. Okay, and it looks like we got a bullish cross. Notice the thin yellow line, that would be the 3 EMA, crosses from underneath. It's no longer plotting underneath and crosses over the 8. So that would be a bullish cross right there. Okay, so on the daily chart, we have a lower high and a lower low. We close over the bullish cross. We close under, see these dots? That's my 17 EMA, okay? So when price is below it, they turn red. When price is above it, you can see here, they turn green, Okay, so coming into the close, all right, we're still under that 17 EMA. Okay, so there's the daily chart. Let's look at this from a bigger perspective. Okay, so I'm going to zoom way out here. You can see right here, this is the origin of our rally. Started back here in April, zoomed up here. Okay, took it by 1, 2, 3, about 6 months, I think. Yeah, about 6 months to get up here in the quadrant 4. Okay, these are my quad lines, all right? And what I do with these quad lines is I take a move, all right, from top to bottom. So I'll measure this move right up here from the bottom, that's the origin of the move, up to its high, okay? This happens to be the all-time high for SPY, okay? This is not the all-time low, but this is the origin of the move. So I always like to keep track of where we are with the quad lines. Now, you can imagine when price was, let's just put it back here. Okay, you can see as price was here, it was in quadrant 4, top of quadrant 4. Okay, you can see right here, it's in the top of quadrant 4. So as price continues to climb and make new highs, quadrant 4 gets bigger and bigger and bigger, and then the quad lines separate higher and higher. You can see there. Well, now we've got these all-time highs. Okay, so right up here we have a pink line, okay? I like to put an anchored VWAP on the all-time high, right? Sometimes that becomes a target. So I like to have one there in case price gets back up to there. I would expect price to probably get halted for a day or two, maybe even rejected. But I would expect price to get halted or delayed because that is the average of the shares or contracts, whatever, from above the anchored VWAP to below the anchored VWAP. So that would be the average up there. So chances are when we get back to the midpoint, there's going to be a lot of waffling around. Probably a little bit of a battle going on between bulls and bears over deciding whether we're going to go higher or we're going to get rejected and go lower. So that pink line, that's my all-time high anchored VWAP. So you can see we're up in quadrant 4. This is quadrant 1 down here at the bottom. This is quadrant 2, 3, and 4. Now, okay, I got 4 quadrants, but in my head, I have 3 sections. Okay, if it's in the upper third of the quad lines, the move from the bottom to the top, for me, it's bullish. That's just for me. Okay, if it's in the upper third, it's bullish. If it's in the lower third, it's bearish. Anywhere in between, I consider it to be neutral. So, based on what I've just demonstrated or just explained right there, we're in the bottom of quadrant 4, which happens to be in the upper third. All right, so that is bullish. Remember I said upper third is bullish. So it's still bullish even though we're not moving up, okay? So we're still bullish, but we haven't made a higher high yet. And in order to make a higher high, you have to get price to go higher than the last high that was up over the 17 EMA, which is right here. Okay, so we haven't made a higher high. So we're still in a downtrend because we've made lower highs and lower lows. So we're still stuck in a downtrend. But the good news is we're not moving down, we're actually moving up at this time. So this is a downtrend with a pullback, okay? So notice how the bulls stepped in right where price would have stopped being bullish. See right here, this would be the upper third for me. See now, see why I say the upper third is still bullish? Notice the bulls came in and rescued price just before it went any lower than out of the upper third. Okay, so that's Nice sign to see the bulls step in right there. And traders in the BYOB Trading Room were kind of looking for that to happen as right alongside with me. All right, so there's price. Price also hit the rally low anchored VWAP. So here's the origin of the rally, and this is the anchored VWAP I set on the origin of the rally up here that we're currently in. And price pulled back to, this is the first time it's touched this. Oh, almost 9-10 months right there. So here we are. We pull back to that lower third, and we hit the low anchored VWAP, and then we bounced back up. So I think we're probably going to bounce up to the all-time high anchored VWAP, all right? But it remains to be seen, all right? We're going to need a whole lot of more bullish flavor out of the bulls if they're going to get that done. But here we are with SPY on the daily chart. We're bullish, still currently in a downtrend, all right? On the weekly chart, again, origin of our move back here in April, we're up. We have a low right here. We made a lower low, so we're still in a downtrend on the weekly chart. So bullish, still in the upper third, so still bullish, but in a downtrend on the weekly and in the daily chart. Okay, on the monthly chart, origin of our move up, and we have not made any lower lows on the monthly chart. So we're still on the monthly chart, we're still bullish and in an uptrend right there. Okay, so I like to keep this 33 right there so that I can measure it. That tells me with regards to the quad lines where the 33% mark would be. All right, we're going to hit the game plan right now. All right, so I'm going to move to the 15-minute chart. All right, so my SPY game plan this morning. I have a red erases green entry over 656.75. Okay, so over that, if I got a 10-minute uptrend, all right, I'm interested in taking that green erases red entry right up there. Okay, so I've got my pivot is 652.50. Above it, I'm going to be bullish. Below it, probably going to be bearish. Red erases green underneath 648.55. If price gets all the way down here, that would be my red erases green entry. I probably want to, if I got a 10-minute downtrend, probably highly interested in trading that 10-minute downtrend to go even further. So I got red erases green entry. So in other words, for me, it's sell below here, buy above there. Okay? I like Friday options. I like them on the multiple of 5. So today with TC2000, that's the platform you're looking at. I would like the 4 DTEs and the 11 DTEs. Now, different platforms label these different days till expiration. Some people don't even do zeros, all right? So for me, this is the way it comes out, 4 DTEs. So 0 DTE would be today, days till expiration. That's what DTE stands for, okay? 4 DTE is going to be Friday. So that would be this Friday and next Friday, okay? So options on the multiple of 5, okay? And I like that because on the multiple of 5, they tend to have more open interest, and more open interest usually transcends into higher liquidity, and higher liquidity means a tighter bid-ask spread, and a tighter bid-ask spread means a lot less slippage if I get stopped out, okay? So for that reason, I like the 4 DTE or the 11 DTE. Actually, doesn't matter what that is. I like the Friday options on the multiple of 5. All right, I like my strikes at the money. I used to like my strikes out of the money, but now when there's so much premium priced into the options, and they are correctly priced, but it's just a lot more than I'm comfortable with. All right, so they're currently at 1079 is the average daily move if you take the average move of the last 10 days and divide it by 10. Well, you take the last 10 days move and then divide it by 10, you get the average. So that's the ATR, average true range, $10.79. So that's $11 right there. Now, sometimes you get a move let's just take this day right here. Okay, you can see that day right there. Move from 642, let's just call it 643. And the low of that day was 638. So that was a $5 move, okay? But I'm paying for an $11 move option, all right? So they're saying the average true range is $11, but I'm only getting a $5 move. So for me, I kind of want to go closer to at the money so I can extract that close to penny for penny performance, all right, between my underlying security and my option. So for that reason, I'm choosing at the money because I want as much movement out of my option as I can get, and I don't want to get stuck with a range-bound day where I'm paying for an $11 movement in my option pricing, but I'm only getting a $5 movement. Okay, I hope that makes sense. If it doesn't, raise your hand, say, can you please explain that one more time? And I'd be happy to help you with that. But anyways, that move was, let me back up. That was actually 638 up to, boy, did I screw that up to 651. But there are some really range-bound days in here. Here's one. Okay, so you can see that was 642 down to 643. There are these last ones, let me just say it, they haven't been range-bound. Okay, let me clear all that up. But sometimes they are range-bound. Okay, so here's one, all right, right there. Okay, this will be the 1st of April. All right, 658. All right, 653. This was not a range-bound day. I didn't see all of this that went with it. Okay, so 658. So there's a $5 move. I'm paying for an $11 move, all right, but I'm not getting the $11 move. I'm only getting a $5 move, all right? You guys kind of get the gist, right? If you don't, just say something because I'd be happy to explain it, all right? That's the way the options are priced for an $11 move. All right, so because of that, I like the at-the-money strike. I trade 10-minute uptrends over VWAP. All right, that's my preferred trade. Actually, my preferred trade is a 10-minute uptrend that resides inside of a 2-hour uptrend, that resides inside of a daily uptrend, that resides inside of a weekly uptrend, inside of a monthly uptrend, over the all-time high anchored VWAP. For me, that's the perfect trade. All right, that's the perfect trade right there. We had a lot of those for a while until we rolled over and we started a little skirmish over there in the Middle East. All right, so I like 10-minute uptrends over VWAP. I like 10-minute downtrends under VWAP. All right, if a 10-minute uptrend were to manifest down here, long before it gets to the green erases red entry up here, okay, I'm not opposed to trading the 10-minute uptrend from back here. I just like to see it break that bullish 10-minute rubber band candle. I'll cover that too. All right? Same thing with the downtrends. If a 10-minute downtrend happens to manifest up here long before, excuse me, it gets to the red erases green entry down here. Okay? I'm not opposed to trading the 10-minute downtrend. I just like to see it break that 10-minute bearish rubber band candle. Okay, so I got kind of got rules. All right, so green erases red over 656.75. Red erases green underneath 648.55. That's the SPY game plan for this morning. Hi, Sue. All right, so let's take a look at QQQ. Start off back here on the 10-minute chart. Same thing as SPY. Notice 10-minute uptrend, into the close. The sticks and the 3 are plotting or riding right on top of the 8 EMA. That's that white line. Okay, so 10-minute uptrend coming into the close. And if you were with me on Friday, I said probably be highly interested in trading a continuation breakout of this 10-minute uptrend. And what are we getting? Continuation breakout right here. Okay, you can see the pre-market price action all the way up there. So there's QQQ on the 10-minute chart. 10-minute uptrend coming into the close. Same for SPY. Interested in trading a continuation of the 10-minute uptrend. So I'm looking for that 10-minute uptrend on SPY as well. SPY is probably up there as well. So 10-minute uptrend coming into the close on Friday. 2-hour chart. You got the sticks and the 3 EMA riding up on top of the white line. That's the 8 EMA. So we've got daylight between the 3 and the 8 EMA. So we've got 2-hour uptrend coming into the close on Friday. On the daily chart, okay, we got a lower high, a lower low. We closed over, remember that bullish cross. See the 3 crossing over the 8. That's a bullish cross. So we got closing above the bullish cross, but under the falling 17, under the all-time high anchored VWAP, under the uptrend line right here. We're at the bottom of quadrant 4. Okay, so that's definitely the upper third. So that's bullish, but still in a downtrend because we have not made any higher highs that reach above the 17 EMA. Okay, so there's QQQ. Bullish, but in a downtrend. Weekly candles, same thing. Got a low right here. See that little low tail that shoots below the 17 EMA? We made a lower low. So we're in a weekly downtrend, but we're still bullish because we're in the upper third. Monthly chart, still bullish and in an uptrend. We have not made any lower lows. Okay, so there's QQQ. QQQ's got a game plan as well. Okay, so on QQQ, I like the same thing, all right? I like the Friday options on the multiple of 5 for the open interest. I like the tight bid-ask spread. I don't like giving up 50 cents between a bid-ask spread just to get into a trade, all right? Especially when I'm going to be buying a contract worth 100 shares, all right? Because if I'm giving them 50 cents per share, I mean that's a lot of upfront that I don't feel like handing over to some market maker. All right, I like a tight bid-ask spread. I like them when they're 1, 2, 3 pennies at most spread apart. I like strikes at the money. All right, if you got a strike that's out of the money, you're not going to get that penny for penny performance. Strikes that are in the money are going to get that penny for penny performance. In other words, the option will move an equal amount as the underlying security most times, all right? But an at the money will get somewhere in between out of the money and in the money, all right? So you'll get some good movement out of the at the money strikes. I trade 10-minute uptrends over VWAP, same thing. If one were to manifest down here, long before the green erases red entry up there, I'm not opposed to trading it. I just like to see it break that 10-minute rubber band candle. All right, so there's QQQ, green erases red over 585.50. Okay, I trade 10-minute downtrends under VWAP. Got a red erases green entry underneath 546.20, and my pivot for today is 580.80. So above that, I'll be bullish. Below that, I'll probably be bearish. So there's QQQ. There's the game plan for QQQ. Let's go take a look at some other indexes. Let's start off with Diamond Dow, and we'll hit it up on the daily chart. Okay, right here. So here's Diamond Dow. We've got a lower high, a lower low. We closed over a bullish cross or over a bullish trap, but under that falling 17, under that all-time high anchored VWAP. You can see right here, this is the bottom of the upper third is this faint line right through here, so we're still bullish. We're not in quadrant 4, but we're up here at the top of quadrant 3, which happens to have a small band, all right, that still happens to be bullish because it's the upper third. Remember, these are quadrants, so they're divided into to 4 equal sections of 25% each. All right, so there's 25, middle 25, middle 25, upper 25. Okay, so we're still in the upper third, so we're bullish, but we're making lower highs and lower lows, so still in a downtrend. We're underneath that all-time high anchored VWAP, and we are underneath quadrant 4 at this time. Let's take a look at IWM. Now, IWM, see how IWM came down to the 33% line and then bounced. It's like the bulls came in and rescued the price action. Lower high Friday, lower low, closing over a bullish cross, closing over this falling 17 EMA, closing under all-time high anchored VWAP in the bottom of quadrant 4. That's going to be bullish, but still in a downtrend. They have not made any higher highs. Now, if they happen to take out that wick, all right, right up there, they will negate the downtrend and convert the uptrend, because that's the first high over the 17 right there. Okay, so there's IWM. Let's take a look at Stinker. Stinker got a lower high, lower low, closing under, over a bearish trap, closing under the falling 17, closing under the all-time high anchored VWAP, closing down here in quadrant, bottom of quadrant 2. Remember, the lower third is bearish. Notice they closed below this 33% line right there. So they're bearish and still in a downtrend because they haven't made any higher highs yet. All they've done is make lows, lower highs, lower low, lower high, lower low. Until they start making higher highs, okay, we're still in a downtrend. So there's FNGU on the daily chart. Let's take a look at silver and gold. All right, silver is lower high, lower low, closing under a bullish trap, under the 17, falling 17 EMA, closing under that pink line, that's the all-time high anchored VWAP, closing right over the top of the 50-yard line. So when I put my quad lines in, everything on the upper half would be kind of considered bullish control. Not really bullish up here, but bullish control would be up here, right here over the 50-yard line, or the dash line right there. Underneath, bearish control. It'd be bearish when it's way down here, but right now, so we're up over the midpoint right now, okay? So this is kind of neutral, all right, and still in a downtrend because we made lower highs and we made, you can see a low there and lower lows. So we're neutral and in a downtrend still on silver. Let's take a look at gold. Gold is a lower high, lower low, closing inside a bullish trap, closing under the falling 17, closing under the all-time high anchored VWAP, the bottom of quadrant 4, so that's still bullish, all right, but still in a downtrend because it's making lower highs and lower lows, and it has yet to make a higher high yet. So there's gold, bullish and in a downtrend. Let's go check out USO. Now USO made a new 10-year high on Friday, all right? So if we pull up the weekly chart and we zoom all the way over here, you can see the last time we were up this high was back in 2015, right there. Okay, so that's new 10-year high for USO. All right, so that's obviously going to be bullish and in an uptrend. Top of quadrant 4, that's bullish. Okay, making highs, making higher highs. That's definitely an uptrend. So that's bullish and an uptrend on USO. UNG, quite the opposite. Lower high, lower low, closing underneath a bearish trap, closing underneath the falling 17. I'll pan way out here so you can see all of this. That is the all-time low right here. This is just a 12-month high. Not the all-time high, just a 12-month high. If you want to see what a picture of an all-time high would be, we'll click the monthly chart. And you can see way back here at 8,000. We're never getting back up there. Okay, that's never going to happen. Okay, so you can see we'll go back to reality. So this is just a 12-month high. Okay, so you can see we didn't set the bar very high, and UNG is still struggling in these last 12 months to actually capture the higher ground above the all-time high anchored VWAP. It's gone up there several times and got rejected. It got up here once and it got tossed out. It got back up there again to retest those highs, and they got tossed out one more time. So that's the all-time low right there for January 2026. So we're bearish because we're in the lower third, and you can see we're making well, there's a high, there's a low. So we're making lower highs and lower lows down here. So there's UNG, bearish and in a downtrend, Sonny. Do they still sell Twinkies? On UNG? Took you back a few years with that one? Okay. All right. I might have missed it. All right. So forgive me. All right, I'm a little slow, but anyways, there's the 12-month high anchored VWAP in price, clearly struggling with that. All right, let's go take a look at the technicals. All right, so you can see this is absolute breadth. Just substitute the word participation, all right, for the word breadth. All right, and this is showing you the participation that's happening in the market. Okay, when you got a thin market, you get a lot more volatility. And as you can see, for the month of March, we've peaked in the middle of March, and we've gotten a whole lot more volatile or thinner as far as participation goes right here. If we get any lower down into here, okay, we may see a reversal. We'll find out, okay? But the good news is when the market's been dipping so far, there has not been a pile-on. In other words, everybody wants to run for the exits, okay? There's not been a run for the exits yet. And even though the market's getting thinner and thinner as price and the indexes continue to fall near the lower part of the upper third, okay? There's not been a mass run for the exits. So, of course, you don't get capitulation, all right, unless you see that mass people piling on trying to get out before the bottom hits. All right, so there's T2101. So that's kind of a good sign. That's kind of a bullish sign, and it's kind of good that you're not seeing everybody pile on. All right, so that's T2101. That's how I look at it. All right, it's a 15-minute chart, and you can see we just keep getting lower and lower. Let's take a look at T2122, and let's just look at the month of March. All right. Now, if you look at the month of March, and this is one continuous line, all right, for the most part, if this was the 50-yard line, and you would say buyers or bulls have control up here, and sellers have control down here, I would say based on what I'm looking at, the majority of the price action or the performance of this ratio was in the lower half, and the bears had control. All right, so you notice we get up here and the bulls lose it, and the bulls lose it again, and the bulls, they reach a little higher, but they still got stuffed. All right, and they lose it again. All right, so you can see all the times when they get up there, they just keep getting pushed back down. So we'll see what happens. Now that we've hit the bottom of the lower third, here's my question: how high are we going to bounce? So yesterday was a nice comeback. We went all the way down to the sell zone right here, Friday. All right, and we rallied back up through, clearing the seller's chop zone, and we rallied back up through to hold the higher ground over the midpoint. And then look at the bullish ending on the day, looking at the buy zone as a target area. So we'll see if we wind up in the buy zone sometime today. We'll find out. That's T2122. That's the 15-minute chart. T2123. Okay, now you can see this is the all. You don't know this, but this is the all-time high. Just take my word for it. You'll see in a minute that it is. All right, so from the all-time high to where we are now, this is bearish. All right, notice we're not in the upper third. We're in the lower third. We're actually in the bottom of quadrant 1, which is kind of really bearish. And I think we made a higher high rate. Yeah, right there. All right, so price left off with an uptrend because, see this candle? They made a higher high and not a lower low. They made a higher high coming into the close on T2123. So that's bearish, but beginning an uptrend. We'll see how far it goes. All right, it's beginning an uptrend on T2123. Okay, now we'll take a look at the 3-bar chart. Okay, so if we go back to 2024, that is an all-time high for 2024. That's in December. Okay, then we have a nice pullback. All right, now here's the origin of our rally back here in April. And you can see where price moves up. All right, makes a new all-time high, pulls back, makes a higher low. From the higher low, it runs up or rallies back up and produces another new all-time high. So here's a new all-time high for 2024. There's an all-time high for 2025. And you can see in 2026, there's a new all-time high for T2123 3-bar chart. Okay, we're up here in quadrant 4, so we're still bullish. All right, we're under this rising 200 SMA. Not my favorite place to be unless I'm a bear. And currently, I'm a little bit bearish, but right now I've seen some bullish activity going on in the SPY and the QQQ, or actually in the indices. So we'll see what happens. But T2123, we're still bullish. But the bottom line, we have not made any higher highs. So we're still in a downtrend on T2123. FNGU, price action there. At the very last candle, they make a higher high. So that is, you can see right here if I put the quad lines on there. Okay, still in the lower third. Okay, so that's bearish. All right, but in an uptrend because they made a low, they got a high here, they made a higher high. See the high right here? They made a higher high, so they're in an uptrend. FNGU, aka stinker, okay, bearish, but in a 15-minute uptrend. All right, let's take a look at our economic package. And that is hidden right here. I just want to refresh this to see if anything's changed. So I want to go over that before I... Zero Gamma 666. Oh, that's for all expirations. They don't have it yet. Okay. I'll go over this in just a second. Let's start with Max Payne because that may have changed. All right, Max Payne is still 650. All right. Put to call ratio is no longer 1.9, 1.6 puts for each call that expires today. So all the zero dates till expiration. All right. There's about 1.5 puts for each call that expires today. And Max Payne is supposed to be at 650. We'll see what happens. Okay. Earnings reports. No reports for Monday, Tuesday. Oh, wait, we got some familiar names. Nothing here that's going to move the markets. Levi Strauss, we've all heard of them. Again, familiar names. Nothing here that's going to move the markets. All right. We trade the indexes. All right. So mainly we're looking for anything that will move the indexes. All right. And there's nothing here with enough market cap to move the indices. All right. So familiar names, but not market movers. Okay. Same thing here. WD-40, BlackBerry. Again, familiar names. Nothing that's going to move the markets. Again, familiar names. Nothing that's going to move the markets. Let's take a look at the economic calendar. On the 6th, we've got ISM Services Index going to come out at 10 o'clock. Okay, so that's like about an hour and 15 minutes away. Tomorrow, we got a delayed report. I guess we're still in a government shutdown. And that comes out at 8:30. And that's on the durable goods. Other than that, got consumer credit at 3 p.m. That might be interesting. Does not state it is a market mover, but the amount of debt that's out there is something to keep an eye on. Right there is that consumer credit. Wednesday, we got MBA mortgage applications at 7, and that's pretty much normal for a Wednesday, is for those MBA mortgage applications to come out at 7 a.m. in the morning every Wednesday. Petroleum report, 10:30 on a Wednesday. That's pretty much normal right there. And we got FOMC minutes. That would be the highlight of the week, is FOMC minutes at 2. Another highlight will be GDP at 8:30. This, because we want to see what Mr. Powell says. This, because it's going to measure how well we're doing as a market. Okay? This measures gross domestic product. This will be a delayed report. So we've got 3 main events this week. All right? We've got FOMC on Wednesday, GDP on Thursday, and look at this, CPI's coming out. Instead of on a Wednesday, they put it on a Friday at 8:30, and it's not the delayed report. Something to make a note of right there. So that will be interesting right there. CPI at 8:30. Now, with all the pricing in fuel or energy going up, I don't know how they're going to interpret that. Because obviously it takes energy to make everything. I mean, even from finished goods to partially finished goods to raw products. Even if it takes, to unearth something takes energy. Everything takes energy. So whenever energy increases, it affects the bottom line for all the companies. And hence you see a dip back to the lower section of quadrant of the upper third up there. So we got a delayed report on GDP. That's going to measure how well we're doing at selling to new markets. In other words, to our neighbors, to everybody that we do trade with. Are they buying our goods and services, or are they passing because our dollar is too rich, or because they're way overpriced and unaffordable? All right, so GDP. So we like a weak dollar, which I'll go over in just a second, but we're going to be measuring GDP on Thursday to see how well we're doing as far as selling to our neighbors. Now, it should be pretty good considering all the weapons we've sold, and I'm hoping we sold them and not just giving them away, but we'll see what happens. So that's GDP, a delayed report at 8:30 on Thursday. Jobless claims 8:30 on Thursday. Personal income and outlays, a delayed report 8:30 on Thursday. Keep in mind that GDP is another delayed report. Corporate profits come out at 8:30 on Thursday. And other than that, the main event there is going to be CPI at 8:30 on Friday. And I'll go over the rest of this when we get closer to it, probably tomorrow. All right, so durable goods coming out today. None of this is really seen durable goods actually move the markets. We'll see what happens. I think gamma exposure moves the markets greater. All right, so let's take a look at gamma. Okay, so the strike with the highest. Okay, everything on the green, this is positive gamma exposure. This is negative gamma exposure. Okay, red is negative, green is positive. I'm only doing for today's expiration because these are what the dealers are providing liquidity for the 0 DTE options. All right, now whenever they sell contracts for the 0 DTE options, all right, they get exposed to something, so they have to, that means they're upside down. So in order to neutralize their delta or their gamma, they have to create it somewhere else. So what happens is we've got P1, which happens to be the strike with the highest positive gamma, is at 665. Let me just tell you, in the overnight sessions and in the pre-market and the post-market sessions, all of this changes, all right? I'll stop moving my cursor. All right, so it will be different. We'll have to check it at 9:34 to see what has changed. Currently, P1 is 665. Earlier today, it was at 660. Well, actually, it was at 665. Then it moved to 660, and now it has moved back to 665. All right, and then the flip was now at 655. You can see was at 653.19. All right, that was where we flipped from a positive gamma regime to a negative gamma regime. All right, in a negative gamma regime, the liquidity providers, aka the dealers, will sell right alongside the institutions and the retail sellers. Okay, that's what happens in a negative gamma regime. All right, so we'll see what happens here when the markets open up. I'm going to take a little break, see if I can render this video, get it off for podcast land and digital land out there on the World Wide Web. And I'm not done. I'm just getting started. Let me get that started so I can get it out there. And I'll come back. I got to get some coffee anyways. Hit the lavatory. So I'll see you guys. Give me about 15, 20 minutes. All right. All right. So I'll see you guys in about 15, 20 minutes, and we'll open up the markets together. All right. So again, I'm looking for just want to state what I'm looking for. All right. I'm looking for this right here. Okay. This is what I'm looking for. This, no, not that one. Not that one. This one right here. Okay. I'm looking for the picture of easy money. All right. I want to see the 3 EMA. All right. Which is that thin yellow line plotting up over that 8 EMA. I want to see them both rising up over VWAP. All right. And I want to see the mouth of that 8 EMA and the VWAP get larger and larger. So I'm looking for, this is the picture that I'm kind of looking for. Disregard this, disregard all of that. I'm looking for this to manifest because that's the picture of easy money. That's what I hope to find. Okay, so that's what I'll be looking for. And in order to find it, I'll probably be looking on the smaller time frame so that I can catch it early. All right, but this is a 10-minute chart, and you can see the sticks and the 3 are plotting up over the 8. All right, and everything's pointed up. See, the 3 is pointed up, the 8 is pointed up. VWAP's not really pointed up, but it's kind of sloped up. All right, so that's what I'll be looking for when the market opens up. All right, so I'll be back in like about 15 minutes, and this is what we're going to be looking for, either going up or going down. It doesn't matter to me. All right, I'll trade either one. I prefer it to be going up because I'd like to see a continuation of the 10-minute uptrend that we left off with on Friday. All right, so we'll see what happens here. All right, I'll see you guys. See what we got for a 10-minute uptrend on SPY right now. Okay, not really a 10-minute uptrend. I'll tell you what I see right now. I see consolidation over prior consolidation, which is a bullish environment. All right, that's what I see so far. All right, so we'll see how it plays out. No uptrend, no downtrend. I'm going to call it bullish consolidation over prior consolidation at this time. Okay, so if we happen to take out the top of that post-market activity, see right here, right on top of that, see those wicks up there? Okay, so if we take that out, that to me is a green erases red entry right up there. Okay, so right up over the top of that pre-market activity, that's green erases red entry. Okay, keep in mind 661.60 is resistance. I don't know how strong it is, but it is right up there overhead. All right, so we'll see how far we can take this. It's at 656 right here, so if we can catch it in at 658 and then ride it up to 661.60, that would be nice. That would be a nice $2 or $3 move. So that's the plan. We'll see what happens. 10-minute chart. See you guys in like 15, 20 minutes. Okay? I'll be right back.